Let's take a look at some results coming out of cement companies. We had Dangote and Lafarge reporting their Q1 results. Impressive results coming out of Dangote there. What did you take out of those results?
Absolutely, Samantha. The results from Dangote Cement and WAPCO were quite impressive. For Dangote Cement, their result came out slightly below our expectation, considering the fact that we had anticipated that full year they would have grown their revenue by about over 70%. However, from what we have seen from the first quarter, the top line only grew by 9% to a level of 54.5 billion, while PBT grew by 10% and PAT grew by 11% due to the tax concessions. Moving on, we think that when later in the year, when they are able to add their additional capacity of about 12.2 million tons from Ibese Boko, then they would be able to increase both their top line and bottom line, and then the result would then come closer to our expectation for their full year.
With expectations of this production coming online, the stock has been flat for the last month. It's sitting at around 121 shillings. Should we be looking to buy into the stock?
Yes, Samantha. Based on our fundamental analysis of the stock, we consider Dangote Cement to be the most attractively priced stock within the sector, trading at a projected PE of just over 8%, compared to other players in the sector like Ashaka Cement that is trading at a forward PE of over 16, and CCNN trading at a forward PE of over 24 times. So in the sector, our preferred plays are Dangote Cement and WAPCO. And we think that at the current levels, they do offer significant potential upside to investors.
Nigerian Breweries also coming out with results this week. Now it reports some strong acceleration in revenue growth there, growth to 52 billion naira, 28% year-on-year growth. Margins have been under some pressure with the likes of Guinness Nigeria coming into that competitive space, looking like it could be tapping into Nigerian Breweries' market share. What are your thoughts around how Nigerian Breweries is playing out at the moment in the space of this heightened competition?
The first quarter result for Nigerian Breweries was very strong. Turnover came at 28% higher than Q1 last year at a level of about 50 billion, while their PAT on the other hand actually increased by just over 15%. We do see that they have high input cost, which is largely as a result of the increase in commodity prices globally. But we also know that the company is looking into ensuring that for the full year, they keep their input cost at less than 10%. So overall for Nigerian Breweries, we think it's still the most attractively priced stock relative to Guinness, because Nigerian Breweries currently is trading at a forward PE of about 17, compared to Guinness that is trading at over 20 times. Also, we think that the acquisition of Heineken in the Sona Group would offer Nigerian Breweries opportunity to take about 3 of the 5 companies that have been acquired, and that would increase the offerings of Nigerian breweries, especially in the less premium brands. So overall, we think that Nigerian Breweries is positioned to do very well this year, and we would be putting our money on it.